Hey traders, this is Daniel with VantagePoint Software, and I want to take a second to talk to you about trading options with VantagePoint. We know here at VantagePoint that options trading gives you a lot of potential opportunity for success, also reduces your risk just by the nature of what options are. We know that options, there's two things that are very, very important to options traders, and that's timing and direction. Let me show you how you can utilize VantagePoint to not only improve your timing, but know whether you're buying calls, whether you're buying puts, so that you can take your trading to the next level. Looking at the screen, we're looking at a chart for lows right here. Before we get into lows, I want to talk about what the artificial intelligence is doing to generate the predictions in lows, because what you're looking at gives you a 1 to 3 day prediction that's up to 86% accurate. So first of all, let's start out over here on the left-hand side of the screen. I'm going to go ahead and pull up lows because I want to show you exactly what's being analyzed within VantagePoint software. So if I go to lows and I just go to the properties, there's this big list of intermarkets. Now, let me tell you what I mean by intermarkets. You see, VantagePoint is using artificial intelligence to analyze the relationships around the world. And we know that if you know what's driving a stock like Lowe's, then you can figure out where Lowe's is expected to go with a high degree of accuracy. The problem is it's humanly impossible to do that level of analysis, and that's why we rely on artificial intelligence. If you look on the left-hand side of the screen, you can see the artificial intelligence has scanned thousands of markets around, tens of thousands of markets around the world to figure out what is influencing the price of Lowe's. So if you look at this list, there's a whole host of ETFs, from the ProShares Short S&P 500 down to the PowerShares QQQs and Vanguard Total Stock Market ETF. There's also currencies. Look at this list right here. We've got the euro, the yen, the US dollar, light sweet crude, natural gas, the E-mini Dow, S&P 500. If we just keep on going down this list, I mean, there's interest rates in here, gold, and so many other stocks, M&T Bank, Biosys Pharmaceuticals. I don't have to read the whole list for you to realize that there's no way that myself or you or any other human would be able to figure out what markets are driving lows. And that's where the artificial intelligence comes in. You see, the artificial intelligence's vantage point has figured out which markets are influencing the share price of Lowe's, the direction that these markets are going to push Lowe's, whether it's going to push it up or pull it down, and the degree of impact. That calculation, that process is a patented process and can't be found anywhere else in the world. As a matter of fact, VantagePoint Software is the first company to ever use artificial intelligence on the financial markets. So the question that you have is, how do I use that to better my options trading? Well, here's your answer. All right, let me get this out of the way. First of all, let's get a nice big chart on the screen. There we go. We've got Lowe's. Look at the top of the screen, and you can see we're looking at the last 2 months of Lowe's. But what I want to draw your attention to is the blue line and the green area on the chart. Look right here on the left-hand side of the screen where the blue line crosses above the black line. This is where VantagePoint is indicating this trend is expected to go up, because you see that blue line is a predicted moving average, which means it has future days data in the calculation. Well, if that blue line crosses a simple moving average, then you know with a high degree of accuracy this trend is expected to go up. That's when you know it's time to buy calls, all right? So let's say it's back here on 817 and I'm looking for an opportunity. I see the blue line cross lows. It's crossing to the upside. I know I'm buying calls. Now, there's another thing that I've got to figure out. There's two things that I've got to figure out when it comes to options trading. Number one, strike price, and number two, expiration date. Now, let's talk about strike price. When the blue line crossed right here on this day, you could see in the bottom right corner, Lowe's was at $97.89. All right. Strike prices you'll really find around the full number, so 98, maybe the half number, 98.50. Whether you buy in the money, near the money, or just at the money is going to be up to your risk propensity and your trading style. But VantagePoint is giving you indication at 97.89 that this is expected to go up. So let's say I buy 98 calls at that point, and I'm going to buy 5 contracts of Lowe's. That should be a pretty good investment from a risk standpoint. Not risk too much, but enough to be very successful. So I'm buying calls at that point. Now, how far do I set my expiration out? Well, let me give you a little secret that VantagePoint users know. if you set your expiration out 60 days or 30 days, if you're doing very short-term options, you're going to give that option enough time to mature, but give you the flexibility to strike early if the projection changes. If you strike early when VantagePoint's indicating that trend is reversing in the next couple of days, you're going to help reduce time decay, and that's what you want to do as an options trader. All right, so I bought 5 contracts at the 98 strike price. I set my expiration out 60 days. This is August 17th, so I can set my expiration out to the regular expiration in October, all right, which we're not quite there yet. So blue line crosses above. The first thing that I'm doing before I actually set that position is look down at that neural index. That's the green and red bar at the bottom. That's going to give me confirmation of whether or not the expected price is going to be stronger or weaker in the next couple of days. So think about that. The blue line is indicating the trend is expected to go up. The neural index is indicating that there's short-term strength in the price. I could take that position, and if I did that, follow my cursor all the way to this crossover right here on this day, September 24th. That's where VantagePoint indicated this trend was expected to reverse over the next couple of days. Now, I'm not at expiration yet. I'm close to a month away from expiration, but you could strike early at that point, reduce the time decay, and lock in your profits. Let's see how we did. Blue line crossed above, the neural index agreed, and then the blue line crossed below, and the neural index agreed again by turning red. Here we go, $17.56 per share on the underlying asset. Now, when you calculate that, I was using 5 options, 5 call contracts. That's 500 shares minus fees, and let's call it a $5,000 profit after premiums paid. That's the kind of trading that VantagePoint traders are able to do when they're trading options, because if you know the direction with up to 86% accuracy, you know whether you're buying calls or puts, and if you're using your expiration date wisely, you could strike early and lock in a lot of profit. Now, let's look at the next trend here. The blue line crossed below, as we said already, and the neural index was red. I could be buying puts at that point. So let's say I bought another 5 put contracts. We'll use the same information. The blue line crossed below at about 114.99. I could buy the 115 put contracts here, buy 5 of them. Again, I set my expiration out 60 days. This is the end of September, so I could go to the normal expiration in November. And when that blue line comes back and crosses, I know I can strike early. Well, look on the right-hand side of the chart. Looks like we've got the blue line crossing the black line. We've got the neural index turning green. So this is an opportunity where VantagePoint users that are trading lows could strike early and lock in their profits to the tune of another $9.88 per share. So we've got 2 options done here on lows in the last 2 months. One, a call, one, a put. All together, if we do the 988 times the 5 contracts, we're talking about another $3,000 profit or so. Let's say between these 2 trades, I'm able to produce $8,000 in profits in just one stock. Now, that's option trading effectively. That's options trading that's going to help you grow your account efficiently. And it's not just on any stock. See, VantagePoint will help you cherry pick the best opportunities. It's going to help you find the stocks that are prime for a new trend. Something like this. Here's another one, AMD. Look way back here on the left-hand side of the chart. AMD was forecasted to go up at the end of July. That forecast happened right there on the beginning of July. That forecast happened right there on July 9th at about $16.61 per share. I could buy the $16 call contract at that point, set my expiration out 60 days, so not an August expiration, but a September normal expiration, September 17th, I believe it was. If you did that on AMD, let's say you had 10 contracts, you would be able to go all the way to expiration, take your profits out of this to the tune of 91% on the underlying asset, $15 per share. Now, 10 contracts minus premium fees, that would generate around $10,000 in profits. Options traders, or maybe you're thinking about getting into options. I think it's visible. I think it's clear how you can see how artificial intelligence and VantagePoint can help you become a lot more profitable when it comes to trading options. So at the end of the day, it's time for you to make the decision. If you haven't made the decision to start using VantagePoint, if you do use VantagePoint already, I know you're doing very well, and you're happy using artificial intelligence. Till next time, guys, happy trading.